Hello, and welcome to Virtual Investor Conferences. My name is Matt Lateplo, and on behalf of OTC Markets, we're very pleased you have joined us for our next live presentation from Newcore Gold Limited. Before I introduce our speaker, a few points to note. Please submit your questions in the question box to the left of the slides. If you are interested in scheduling a meeting with Newcore Gold Limited, please click on the Meetings tab found on the left navigation bar. You will be able to view the company's availability and submit a meeting request. On a final note, all today's presentations will be recorded and available for 24/7 replay. At this point, I'm very pleased to welcome Luke Alexander, President, CEO, and Director of Newcore Gold Limited, which trades on the OTCQX Best Market under the symbol NCAUF and on the TSXV under the symbol NCAU. Welcome, Luke.
Yeah, thank you very much, and thank you everyone for listening in today. I'm Luke Alexander, President and CEO of Newcore Gold. Over the next 20-25 minutes, I'll just run you through Newcore Gold. We've got a district-scale exploration project in Ghana. It's fundamentally underpinned by a very robust economic study that we put out in 2021, which has very, very good economics. And the optionality of our project is something that I'll get into some detail about. We currently sit on a 1.4 million ounce resource. We are in the process of updating that resource, and we're also in the process of drilling. So lots of news flow to come and good catalysts for the company. If you're looking at the company today, I personally think it's a great opportunity to be looking at buying some stock. We're trading at a level that we haven't traded at in a couple of years. That's really on the back of tax loss selling. The whole junior mining sector has been hit by tax loss selling over the last couple of months, and we've been caught up in that selling. We, in the last 4 weeks, have traded about 20% of the free float of the company. So there's been a huge amount of volume in the company, about 14 million shares. And when we look at free float management and directors, we own 24% of Newcore. Our top 5 shareholders own about 30%. These are very large institutional shareholders. So if we exclude those, shareholders and management and directors, we've traded about 20% of the shares that are held by other shareholders. So big volume, and my personal view is that there's been a number of larger shareholders who've been buying around these levels and starting to consolidate positions. So as we get out of tax loss selling in the next week or two, I would expect. I think there's a real opportunity to re-rate the stock, given all of the fundamental value as well as catalysts that we've got coming in the near term. I guess with all of that being said, I should probably highlight that I will be making some forward-looking statements. So I'd encourage you to go to our website and have a look at that. While you're there, I'd also encourage you to sign up to some of the different social media platforms that we're active on. We put a lot of very good content out, something that we've had tremendous feedback on from shareholders in the capital markets. In terms of Newcore Gold itself, as I mentioned, we've got a district scale exploration project in Ghana. Ghana is a tier 1 jurisdiction to be operating in. You'd be very hard pressed to get the size of land package that we've currently got in Ghana. I mentioned management and directors. We own 24% of Newcore, so we're truly aligned with shareholders and ultimately think as shareholders first. And it's important to mention that these are shares that we bought alongside investors. In terms of my personal cost base, we're trading right around where I bought all of my stock in Newcore. So again, in terms of new shareholders looking to potentially buy Newcore, you're getting in alongside management and directors. We completed a 90,000 meter drill program in August of this year. It was the largest ever drill program, so I'll talk about that in a little bit of detail as well. In terms of the management team and directors, I spent the first 15 years of my career on the investment banking side of the business, 12 years in London, covering all the big global natural resource funds out of the UK and Europe. advising different ASX, TSX, London-listed mining companies on transactions and deals around the world. That's where I got to know the team here and joined as CEO a couple of years ago. So for a company of our size, it's very rare that you see such a strong board and management team. But that's ultimately because all of us see the fundamental value that there is in our NCAU project in Ghana. ESG is something that is very important to us. We could spend the next 4 or 5 hours talking about it, but ultimately our view is that all stakeholders need to benefit in a project, and that's ultimately the best way to push a project forward. In terms of the capital structure and support that we've got from the market, we've got 138 million shares outstanding. We're currently sitting on about $5 million of cash. No warrants. We've been able to raise all of the money over the last couple of years, which is roughly $35 million Canadian, without having to issue warrants. And that's another way to look at our company today. If you're buying Newcore today, you're buying it for less than the money that we've raised over the last 2 years. We're currently trading at about a $30 million Canadian market cap, which is about, I guess that'd be about $20 million US, so less than a $20 million US EV. In terms of our institutional ownership, we've grown that from 0% to about 40% over the last 2 years. Here are some of the institutional investors who currently own Newcore. These are deep-pocketed, long-term focused mining and precious metals investors who ultimately recognize the value that there is within Newcore and the huge upside potential from an exploration perspective. We also have very good coverage from the capital markets. We currently have 5 tier 1 investment banks out of Toronto who cover us from a research perspective. So if you've got relationships with any of these groups, I would definitely encourage you to go and get some of that research or talk to the analysts at those different groups. In terms of Ghana, we always highlight that it is a tier 1 jurisdiction to be operating in. It is the 6th largest gold producer globally, just behind Canada. So as a result, it is very important for the economy. It's important for for taxes, jobs, and as a result, you've got a very supportive government in country. We're situated down in the southwest corner of Ghana. And one thing that we always highlight is, in terms of Ghana, don't listen to, me talking about what a great jurisdiction it is, but look at the major mining companies who are currently operating in Ghana. You've currently got 3 of the top 10 largest gold producers with significant operations in Ghana. Newmont being obviously the largest gold producer globally. They're in the process of investing another $850 million into their Ahafo project, which sits to the north of us. And that will take them from roughly 14% of their global production to roughly 20% of their global production coming from Ghana. So again, I think that speaks for itself in terms of what a great jurisdiction it is to be operating on. As I mentioned, we're in the southwest corner of Ghana. If we zoom in on that a little bit more, you've got 2 prolific gold belts that run through Ghana. You've got the Ashanti belt, and then we're situated on the Sefwi-Bibiani belt. Great neighbors along trend from us. So 50 kilometers to the north, you've got Chirano, which sits at about 5.5-6 million ounces. To the north of that, Bibiani at 6.5 million ounces. And then here's that Newmont mine that I mentioned, the Ahafo mine, where they're putting another 850 million in, and that sits at about 20 million ounces. So great deposits along trend from us. The other thing we always like to highlight is, sometimes people think of projects in Africa as being in the middle of nowhere. That couldn't be further from the truth for us. We've actually got a paved road that runs right through the middle of our project to the town of Enchi. NCAU's got about 15,000 people, so it's got all of the support services we could want. It's got a university campus, it's got schools, it's got a hospital. We can house all of our employees here in NCAU, but it also sits far enough away from our project, about 10 kilometers as a crow flies, that we don't anticipate any issues when it comes time to developing the project. In terms of infrastructure, this is a good example of that. We've got a paved road. Again, you can drive 60 miles an hour along this road. About a half dozen gas stations throughout our project. Cell phone towers. 10 minutes down this dirt gravel forestry road, you're standing on top of our Boeing deposit. Another 10 minutes from there, you're standing on top of CUM. So very good infrastructure, and this infrastructure is one of the things that really helps with the economics of the project. In terms of the project itself, very large land package, about 216 square kilometers in size. We've identified 25 targets to date, of which we've only drilled on 9. From the northern end to the southern end, you're looking at about 40 kilometers in strike. As I mentioned, we're on the Sefwi-Bibiani belt. You've got the main Bibiani shear that runs right up to Ahafo. And then what you get is these second and third order splays coming off of the main Bibiani shear. And that's typically where the gold mineralization sits. If you add up all of the strike length of those shears going through our property, you're looking at about 100 kilometers or 60 miles of shears. So again, it highlights the district scale opportunity. In 2021, we did put out a PEA on the project. I would encourage you to go to our website. We've got a full 30-page presentation that goes through a bunch of detail about the economics of the project. But at a very high level, what we outlined was a very simple open pit heap leach project. And if you look at it at a $1,650 gold price, you're looking at an after-tax NPV of $212 million US. Again, that's relative to a $20 million US market cap today. After-tax IRR of roughly 42%. And one of the things that really helps drive those economics is the low capital required for a heap leach project, as well as all of that infrastructure that I just showed you that we're able to leverage off of. This is one of the key differentiators of our NCAU project and our company relative to a number of other projects and companies that we look at out there. You're looking at companies who have, let's say, $500 million NPVs for CapExes of $400 million, or a $600 million NPV for a CapEx of 500. So very skinny margins from an NPV to CapEx perspective. When you look at our NCAU project, again, at 200 million after-tax NPV relative to $100 million CapEx, you're looking at about a 2.1 to 1 NPV to CapEx ratio. I definitely encourage you to go look at other projects, look at this type of metric, and it is something that really differentiates our project and gives investors a lot of optionality. If we now want to look at it at a $1,850 gold price, I assume if you're tuning into this webinar today, you've got a positive outlook on the gold price. So if we look at it at an $1,850 gold price, you're now looking at an after-tax NPV of 300 million, after-tax IRR of roughly 54%, and less than a 2-year payback. So very good economics for our project. One of the things that really helps drive that is the very low strip ratio that we've got. This is something that I would encourage you, as you go through these types of presentations, if people aren't highlighting what their strip ratio is, then you should definitely ask, because that is something that really helps drive the economics of our project. In terms of the historical work and the current resource on the project, we currently sit at about 1.4 million ounces. This is fed by about 110,000 meters of historical drilling. In terms of the grade, we currently sit at 0.62 grams per ton. If you compare that to other heap leach projects globally, you're typically looking at more like 0.3 to 0.5 grams per ton. So one of the things that does help drive the economics of our project is the higher grades that you get with the oxide and transitional material on our project. That being said, if we look at it from a cutoff perspective, what drove the 1.4 million ounces is the cutoff grade that came out of the economic study of 0.2 grams per ton. If you want to increase that to, let's say, 0.5 grams per ton, you're still looking at over 1 million ounces at roughly 1 gram per ton. So lots of flexibility in our resource. We are in the process of updating this resource. We're hoping to get that out in the next few weeks. Our consultants are busy working on it at the moment, and that'll I think be a good catalyst for Newcore. In terms of the drilling, we just completed in August a 90,000 meter drill program. That is the largest ever drill program on our project. And we really wanted to accomplish 4 key things with this drilling. We wanted to expand all of our existing resource areas. We wanted to go back to previously drill tested areas. We wanted to make some new discoveries. Excited to have made 3 new discoveries in 2022. And then we wanted to start to test some of the sulfide material below the oxide transitional zone and look at some higher grades on our project as well. And we're excited to have made a number of higher grade discoveries on the project. Going into the project now, if we have a little bit closer look at it, I'll walk you through those 4 different things that we wanted to accomplish. Looking at the project now, again, 216 square kilometers, very large land package. Here are those shears that I talked about that run through our project where the mineralization typically sits. If I now show you airborne geophysics, it highlights it very well in terms of these big shears running through our project and where we focus a lot of our exploration work. Our largest deposit is Seum, sits at about half of our current resource, followed by Boeing, Niam, and Quachikrum. Just to give you an idea of scale, this is about 4 or 5 kilometers between our 2 largest deposits. If I now let's take you into Boeing, for example, our second largest deposit, and this one's a good example of the step out resource expansion drilling that we did as part of that 90,000 meters. Boeing sits at roughly 500,000 ounces. If we now look at the drilling that we did as part of the 90,000 meters, you can see the drill collars here. If you look at it from the northern end to the southern end, this is about 2.8 kilometers of pit constrained resource. You can see the pit sitting there. We then stepped out about 400 meters to the north, about 1 kilometer to the south, and continued to grow the overall mineralized footprint. So we've added about 1.4 kilometers of strike here at Boeing. If I took you to Seum and Niam and Quachikrum, it would look very similar to this. And that's where we think we're going to get a bunch of the resource expansion. The other thing we wanted to do was look at some new areas and make some greenfield discoveries to ultimately grow the overall size potential of the project. What we're now looking at here, this is our Seum deposit now. Again, it represents about 725,000 ounces, or half of our current resource. And then we tested this area down here, Seum South, very large anomaly, about 6 kilometers by 3 kilometers in size. We made a number of discoveries here, which will warrant follow-up drilling. Second area was Tokasea. Again, it's a very large area, about 3 by 2 kilometers in size. We put an initial 28 holes into Tokasea. We liked what we saw, so we added another 30 holes and then finished off with an additional 24 holes. So we've now put about 82 holes into this Tokasea area, and we think that we might actually even be able to get a small resource out on Tokasea as part of the update that we're in the process of doing. Lastly, we identified a very large anomaly down here at the CAU extension and had some very good results there as well. If we just look at one of these cross sections now, what we're looking at here, these are the pits that currently hold the resource at the southern end of our CAU deposit. We then, stepped out about 500 meters, 750 meters to the east of this initial discovery, and we hit, 5.84 grams over 6 meters. Within that, 27 grams over a meter. So one of the things that we're ultimately going to look at doing is going back into this area here and obviously doing some follow-up drilling and looking to grow the overall mineralized footprint there at the extension. The last thing, as I mentioned, as part of this 90,000 meter program that we wanted to accomplish was to start to make some higher grade discoveries on our project. If you look at other greenstone hosted deposits along the Sefwi-Bibiani belt, and what we're looking at here is a long section of the Toronto mine, which sits 50 kilometers to the north of us. It would look very similar to Newmont's Ahafo mine or the Bibiani mine. And we compare that to a long section of our Enchi project, it's pretty clear to see that, once you start to get through the oxide transitional zone, which is what we've highlighted on both of these long sections with this dotted line, is that it really starts to grow, these deposits really start to grow in size and grade. To give you a sense of that, Toronto is currently mining down at 800 meters below surface. They've drilled all the way down to 1.2, 1.3 kilometers below surface. Prior to this 90,000 meter drill program kicking off, the deepest ever hole was only down to 125 meters. And as part of this drill program, we've started to drill down to 250 to 300 meters below surface. And we've been having some very encouraging results. Looking at our NIAM deposit, this hole number 45, as we got down to that 175, 200 meter level, we hit 5.4 grams over 9 meters. Sitting 500 meters to the south of that in this hole number 48, again, as we got down to those similar levels, we hit 7.5 grams over almost 8 meters, 4.5 over 13. If I now pull you back from that, we can start to see where we think a couple of these higher grade shoots sit at NIAM. So 5.8 grams over 7, 5.6 over 8, 5.4 over 9. So we think we can start talking about how we've hit one of these higher grade zones that plunges at depth. Sitting 500 meters to the south, 3.2 over 9, 7.4 over 8, 3.5 over 9. So again, we think that we can start talking about how we've hit one of these higher grade zones that plunges at depth. So that was the final thing we wanted to accomplish with the 90,000 meter drill program, is hitting some high grade feeder zones at depth. We are in the process of drilling an additional 5,000 meters. And part of the focus of that 5,000 meters is doing follow-up drilling on some of these higher grade results that we've had on our project. The last thing that maybe I'll just kind of touch on is optionality. So when you look at all of the infrastructure that we've got at our project, the very low capex required from a heap leach perspective, one of the things that our Enchi project presents for investors and potential acquirers of Newcore down the road is the ability to bring a smaller 100,000 ounce heap leach project into production, but then ultimately scale that up with the cash flow that's generated from the project. So as the resource grows, take it from 100,000 ounces to 150,000 ounces. As additional sulfides are discovered across the project, which won't lend themselves to a heap leach operation, bring in a CIL plant with the cash flow that's generated again from the project. So companies can look at this and investors can look at this as initial 100,000 ounces of production with the ability to scale up to 150 to 200 without a huge upfront capex. So again, that's one of the key differentiators, and it's something that we're doing a lot of work on de-risking in the background. So we're in the process of completing an environmental baseline study. We're getting some bulk heap leach samples done. That's to complement, hundreds of bottle roll tests that we've done from a MET perspective, as well as column tests. So lots of de-risking of the project to ultimately continue to highlight the robust economics for the project. So with that, maybe I'll leave 5 minutes for any questions. My colleague Mal Carvasca, who heads up our business development team, as well as the investor relations side of the business, will come on and join us with any questions that have popped up.
Thanks very much, Luke. So let's just kick things off with, can you touch on who the top institutional shareholders are again?
Yep. So we, again, over the last couple of years, have built our institutional ownership from roughly 0 to 40%. Primarily mining focused investors. So Franklin Templeton is our largest holder. They currently own a little more than 9%. Ruffer is our second largest holder. They own about 7% of Newcore. Merck and SSI, they both own roughly 5% of Newcore. And then Earth Resources, they own about 4% of Newcore. So when you look at those top institutional investors, they hold about 30% of Newcore.
So the institutional ownership is impressive. What attracted them to invest in Newcore over the past 2 years?
The district scale, exploration on the project is something that I think they all recognize the upside potential of that. The fundamental economics of the project, I mean, very simple heap leach project. I've talked about that in some detail. And then obviously, the management team and board involved, lots of successful companies that the team's been involved in. Newmarket Gold, for example, that was a $10 million company, grew and sold for $1.4 billion. Caliber Mining, again, that's been a big success story over the last few years. Northern Empire, similar, $10 million company that grew over the course of a couple of years to get sold for roughly 90 or 100 million. So, a good track record, as well as a lot of alignment. As I mentioned, 24% ownership between the board and management. So I think that's key for a lot of institutional investors is to know that, the team's got skin in the game.
Can you comment on the Ghana government's proposal to buy all bullion produced in the country? How might it affect your business?
So for us, given we're not currently producing gold, it won't impact our business. I actually think it's a very smart move on the government's part to ultimately leverage, the gold production that there is in country to ultimately barter using gold for oil. For the producing companies in country, and I've spoken to a few of them specifically about this, they kind of look at it as as a bit of a mute point, or actually in some cases as a benefit to their businesses. So if you think of a producing company in Ghana, or even us, for example, you've got a huge amount of your costs are in cedis, which is the Ghanaian currency. So for Newmont, for example, let's say 25% of their expenses for their operations in Ghana will be in cedis. So salaries, for example, a number of other costs. So you now no longer need to go and convert, cedis into US dollars to sell your gold. to then bring that money back into country and convert it back into cedis. So it actually benefits a number of the producing companies in country, and you reduce the friction cost of having to convert into US dollars to convert back into cedis. So I think it's actually a win-win for both the producers in country as well as the government, who now no longer needs to do the same transaction of converting into US dollars and then back into cedis.
And conscious of time, so if you can wrap things up with this question, what are the catalysts for re-rating of Newcore?
I think where we're trading today, we're trading at roughly 0.1 times the NPV of the project. So, from a value perspective, there's a huge amount of value in the company. We're trading at about $10 per ounce in the ground. These are ounces sitting in a tier 1 jurisdiction. But in terms of re-rating, we've got a resource update coming out in the next month or so, as well as we've got more drill results to come out, environmental baseline study. So continued de-risking of the project and drill results will be the key drivers from here going forward.
Thank you very much, Luke. I believe we're out of time. So thank you everyone for joining, and please don't hesitate to reach out with any further questions directly to us.